Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs of the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
This is Peter Schiff at Wall Street Unspun, taking your calls live. The number 888-678-9597, 888-678-9597. I do the show live every Wednesday, 8 p.m. Eastern Time, 5 p.m. Pacific Time. I'm actually doing the show today from my campaign headquarters for Schiff for Senate here in Connecticut. We're actually having our grand opening party tomorrow night at this location. For those of you who happen to be in Connecticut, live near Milford, we're having a grand opening to inaugurate this campaign headquarters. It's tomorrow night between 6 and 9 p.m. You can get the details on my website, schiffforsenate.com. So if anybody is in the Connecticut area and they want to come by and meet the campaign staff, tomorrow night is the night to do it. I was actually here earlier. I had a meeting with several people from a local grassroots organization answering some of their questions. I understand that, I know that they filmed my hour or so discussion with them where I answered their questions. So it'll probably end up on YouTube, as are most of the town hall meetings that I have been speaking at over the past several weeks. I've gone to many, many different town halls, and I'm speaking to the members there to try to get them to know a little bit about me and about my campaign. One other word quickly about the campaign. I know I've been talking about ways for the volunteers to help me, the people who want to volunteer and work for Schiff for Senate. I finally launched a phone banking system where people around the country who want to make telephone calls to Connecticut voters on my behalf to let them know that I'm in this race and what I stand for, that system is now up and running. So if anybody wants to participate or learn about that system, go to my personal YouTube site, Schiff Report, and look at one of the top videos I just recorded. It's called Dialing for Votes. There's two videos like that. Watch them both, but there's a 9-minute video, and then I made like a 2-minute follow-up. But go to the options on what you need to do and it'll tell you how you can go about helping me by making these phone calls. And I'm hoping that the volunteers will do at least 10 calls a day, spend an hour a day calling voters. I think it'll make a lot of difference. But anyway, if you want to get information about how to do that and how to help, go to my YouTube site, Schiff Report, and watch the videos on dialing for votes. Anyway, Ben Bernanke, Person of the Year, Time Magazine. What do you know about that? Well, I guess if they could make Adolf Hitler and Stalin and Ayatollah Khomeini and some of those guys Person of the Year, I guess they can make Ben Bernanke Person of the Year. He's obviously not quite as bad as some of those other notorious villains who have been given that honor by Time Magazine. But I don't think Time Magazine thought that he was an evil, bad man. I think they actually, believed the hype and the propaganda that he saved us from a repeat of the Great Depression, and therefore the man who saved us from that terrible fate. Why not make him the Person of the Year? Now, he beat out such other great competitors as Timothy Geithner, who I understand was also considered for the Man of the Year, or Person of the Year, to keep it politically correct, because I know they did consider some women. I think some in Congress. I hear maybe even Nancy Pelosi. I'm not sure. But they did, of course, consider President Obama, making him Man of the Year. I mean, why not? He got the Nobel Peace Prize, so why not make him Time Magazine's Man of the Year as well? It's too bad he missed out on the Heisman Trophy. I thought he was a shoo-in for that one. But anyway, maybe if you asked, Goldman Sachs or Morgan Stanley or J.P. Morgan for the Man of the Year, I can see them. Bernanke. I mean, he's the man of the decade as far as they're concerned. I mean, their Christmas stockings are filled to the brim with bonus checks thanks to Ben Bernanke. So he's certainly their Man of the Year. But he's not my Man of the Year. He's not Main Street's Man of the Year. He shouldn't be Time Magazine's Man of the Year. He's the worst Man of the Year. They're crediting him for keeping us out of the Great Depression, right? I mean, he's what's leading us in to an even worse fate, an inflationary depression that is coming very soon. I couldn't actually have written a better critique if I was going to, name him the worst Man of the Year than what Time Magazine wrote in proclaiming him the Man of the Year. I mean, I could use Time Magazine's own words to show you how pathetic the job that this man did. And sure, yes, had he not done all these terrible things, the economy would have been in worse shape in the short run. But in the long run, it would be in infinitely better shape. Instead, he has created a tremendous problem for a fate that is likely going to be worse than the Great Depression. It will be worse than the crisis that Time Magazine is honoring him for having spared us from or saved us from. I mean, if you think about it, though, the amount of pain and misery that is going to result from Ben Bernanke's actions maybe does qualify him for Man of the Year, because it takes a rare man to inflict this type of damage and pain on such a massive scale. No one else could have done it. And so for that feat, maybe we should honor him, but we need to keep the honor in perspective, because we're really not honoring somebody for doing that. We just want to point out, what they've done. And, maybe that's what Time Magazine was doing with the headlines when they named these notorious, thugs and despots and mass murderers as men. Maybe they weren't making a judgment call on whether they were good or bad. It was just that they were very influential in what they did, and that their decisions influenced the world profoundly. And certainly the mistakes that Ben Bernanke made will profoundly influence this country, just not the way that Time Magazine perceives that. Let me just read a little bit of what Time Magazine wrote. Here's what they wrote. Professor Bernanke of Princeton was a leading scholar of the Great Depression. He knew how the passive create the calamity through its stubborn refusal to expand the money supply and its tragic lack of imagination and experimentation. So in other words, Time Magazine thinks that the reason we had the Great Depression was because the Federal Reserve didn't create enough inflation. Come on. And because the Federal Reserve lacked imagination and they weren't willing to experiment. You mean crazy, stupid experiments like the ones Ben Bernanke has been doing that are going to utterly destroy the country? I mean, because the bank vanity, that's why we had the Great Depression? I mean, talk about revisionist history. Let me continue to read on. And, I am not making this stuff up. This is right out of Time Magazine. Chairman Ben Bernanke of Washington was determined not to be the Fed chairman who presided over the Depression 2.0. So when turbulence in U.S. housing markets materialized into the worst global financial crisis in more than 75 years, now I'm going to add something here. Of course, Time Magazine doesn't point out that the Federal Reserve itself is the financial crisis in 75 years, a Federal Reserve that Ben Bernanke was an instrumental part of. He was right there. He was Alan Greenspan's co-pilot as we crashed this plane into the side of a cliff, right? So he was right there by his side. He was his partner in crime, right? So let me get back to here. So he conjured up my own words being interposed there. So depression, when the turbulence of the U.S. housing market metastasized into the worst global in more than 75 years, he conjured up trillions of new dollars and blasted them into the economy. He engineered massive public rescue of failing private companies, down interest rates to zero, lent to mutual funds, hedge funds, foreign banks, investment banks, manufacturers, insurers, and other borrowers who had never dreamed of receiving Fed cash. He called credit markets in everything from car loans to corporate paper. Housing finance, housing is now completely financed by the government, with a breathtaking shopping spree for mortgage bonds, blew up the Fed's balance sheet to 3 times its previous size, and generally transformed the staid arena of central banking into a stage for desperate improvisation. I'm not making this up. And this is why they think he should be Man of the Year. And here's how they sum it up. He didn't just reshape U.S. monetary policy. He led an effort to save the world's economy. Save the world's economy. And look, I mean, I couldn't have written this any better myself if my intention was to critique him, was to say why his actions were so horrific that it constitutes him to be, nominated for the worst Man of the Year. But anyway, you could read the entire article. I'm going on Fox and Friends early tomorrow morning for you early risers. I think it's somewhere between 6 and 7 a.m. on Fox News. But I'm going to be debating somebody, I guess, mini debate. I think it's a New York Times or Wall Street Journal reporter who supports, Time Magazine honoring Ben Bernanke. I, of course, are going to take the opposite point of view and criticize Ben Bernanke. So that'll be on Fox and Friends tomorrow. Also, speaking about Fox, I was scheduled. I'm going to be doing Fox News on Friday again. My friend Glenn Beck is taking the day off, and my good friend Judge Napolitano is filling in for Glenn Beck. And the judge has invited me to share that hour with him and be a guest on the show. And I love being on the show with the judge. If you see me, he does this show on FoxNews.com every day, Freedom Watch. And I go on that show quite often. He has other really, really good guests. I did a hit on Glenn Beck's show with the judge not too long ago. Also, Stossel was on with me. It was a great interview. I know it's up on YouTube, but it should be another good show. That'll be on this Friday at 5. I've been pretty flat since I did the last show. The dollar still remains in its corrective mode. The dollar index is now, around the 77 level, 76 and change. So it's moved off its lows. Gold has moved off its highs. I mean, it's now around 1,100 or so. It had been above 1,200. Of course, people are still claiming this is it. The bubble has burst in gold. Run for the exits. You're going to get crushed if you own gold. You're going to lose all your money. This is the same stuff they've been saying over and over and over again ever since gold first announced. Believe me, it's no bubble. It may be a bubble one rise if there were a bubble in gold, but we're nowhere near there yet. It might happen, but not now. And also with the dollar, you got the dollar rise. A lot of people are saying that this is going to be a more significant rise. more and more people are now getting bullish on the dollar, which I think is very bearish for the dollar. In fact, there are many people who have been long-term dollar bears, who remain long-term dollar bears, that are now getting bullish because they think it's a contrarian play, because they think everybody else is bearish on the dollar, so they're turning bullish. Well, I mean, if you got a whole bunch of people who are becoming dollar bulls because they claim everybody else is bearish, well, then they're already wrong. You know, they're trying to be bearish on the dollar to be a contrarian, but you can't have a bunch of people being contrarians because now they're not contrarian anymore. I think it's certainly possible that the dollar could rise for a while on the expectation of an aggressive Fed taking away the stimulus and hiking interest rates, but that ain't going to happen. And at some point, the market's going to call the Fed's bluff and realize that that's not going to happen because this economy is phony. This recovery is phony. It is not a recovery. We're simply spending stimulus money, and we're spending ourselves into a bigger problem than the one that we're trying to resolve with the stimulus. Bernanke. And so, they're going to keep rates at zero, and they're going to bluff, and they're going to say inflation is not a problem when inflation is a serious problem. Whatever the government tells you not to worry about something, that's what you better worry about. And the more they go out of their way to tell you not to worry about it, the more you know that's the only thing that you need to be worrying about. But it needs inflation because that is the government's plan. That's their get-out-of-recession-free card as far as they're concerned. Inflation is the route they've chosen. They are going to inflate and inflate and inflate, and they know that because they think inflation is worse than deflation. Well, it's worse for the government, no doubt about it. As the world's biggest debtor, the last thing the government wants is deflation. But you know what? That's the most thing. That's what the country needs. It's deflation. Prices are too high. They need to come down. We need the market to function properly. After an inflationary bubble, you need deflation. That's the cure. The government doesn't want the cure because they suffer the most from it. So they are going to resort to inflation. And, of course, it has its benefits. People are confused by inflation. It's like a drug. And initially, it makes their stock portfolios go up, and it stops their house from falling. And somehow they buy into this delusion that because they have a bigger number attached to their net worth somehow or on their assets, that everything must be getting better. But they're numb to the fact that the dollar itself is losing value, and the wealth they think they have is an illusion. And when you awaken from the drunken stupor of inflation, it's a sobering reality, a painful reality, and it's coming, and it is coming soon. Hopefully, Time Magazine will be able to realize the error of its ways and take back that Man of the Year, though they've never done that before. I guess if they didn't do it for these other villains that were obviously worse than Bernanke, so he's going to be able to keep that magazine. But I wonder if they'll even make the connection when we ultimately end up in Depression 2.0 or hyperinflation. I wonder if it'll dawn on them that depression, that inflationary depression, was courtesy of their person of the year, Ben Bernanke. Anyway, enough about Bernanke. Let me start taking your phone calls. First up is Rick, so constituent from Connecticut. How you doing, Rick?
How you doing, Peter? Hey, my question is about the dollar index.
I'm well. How are you?
Good. My question is about the dollar index. It's a comparison of currencies around the world, but who sets the value of these currencies? And the reason I bring this question up is because I've heard how the United States has said that China isn't valuing their currency properly. They should make it higher. Who sets the values? How does it all work? Is it manipulated?
Well, the dollar index is composed of just, I think, 6 or 7. I think it's the British pound is in there, the Canadian dollar, the Australian dollar, the euro, the Swiss franc, I think the Swedish kroner, the Japanese yen. I think that's it. So it's not all the currencies in the world. It's just a small basket that is part of the dollar index. But nobody sets the value. I mean, the value is determined in the marketplace based on, demand for those currencies. So we don't have fixed exchange rates anymore, and none of those currencies are backed by anything. There's no gold backing. So the value simply is set in the market. Now, in the case of the RMB, the Chinese currency, that currency is being manipulated. The Chinese is determining the value of the RMB, the U.S. dollar. And the Chinese government does that by intervening in markets to hold down the value of the RMB. And the way it does that is it goes into the open market and sells RMB until it pushes the RMB's value down to the level that it wants to keep it at. And when it's selling the RMB, it is buying U.S. dollars. And that's why China is sitting on over $1 trillion, because that's how many dollars they had to buy to prevent their currency from rising. And, of course, they take those dollars to the United States government by buying our treasury. So that's why it's so disingenuous when you hear, U.S. presidents beating up China saying, stop manipulating your currency. Well, the way they manipulate their currency is by buying treasuries and subsidizing our economy. Because by doing that, American consumers get to buy stuff on the cheap, and the U.S. government gets to keep on spending money it doesn't have because the Chinese are the ones that are loaning it to them. So eventually this is going to come to an end because the Chinese are getting screwed. But ultimately, it's Americans that are getting screwed too, because the government is taking all this money and undermining our economy, and we're now more and more dependent on Chinese charity. And we know that one thing is for sure: when the Chinese figure out that they're running a charity, they're going to stop doing it, and the longer they keep us on the dole, the harder it's going to be to recover, when we're on our own.
All right. Also, one thing, the United States has been increasing the money supply greatly, and so has United Kingdom, and I'm sure a bunch of others. Now, if everybody increased their amount of currency 10 times, the ratio would be the same. But, of course, what the question I'm trying to get at is, would that at some point the dollar index has to decouple from gold somewhat, because if everybody prints, like I said, 10 times.
Well, look, I understand. I'm saying is paper currencies don't float. They all sink at different rates. But yes, if all the world's governments are creating inflation, then the dollar will decline in value along with other currencies. And so the relative exchange rates between the dollar and those other currencies might not change. But what happens is the price of gold goes through the roof because the price of gold is going up in every currency. So you can't fool gold. But the reality is, based on the economic imbalances that exist, based on the relative differentials in trade, the balance of trade, and our lack of safe trade, if all the world's governments create inflation, I think the dollar will lose value faster. And so it might appear as if other currencies are gaining in value. They're actually not. They're just losing value more slowly than the dollar. And you see that in the price of gold.
Do you know why the dollar is having this pickup all of a sudden now? I don't understand what's driving the dollar up. I know it's demand, but what reason is bringing that demand?
Well, nothing moves in a straight line. People have been selling the dollar, buying it back, and again, you do have some people speculating. They see the U.S. economy appearing to grow based on the GDP, and so people are starting to factor in growth, rate hikes into the dollar. That's getting priced in. But ultimately, I think, that's not going to happen. And if you do remember, back once raising rates, in those quarter-point increments after having held them at 1% for a couple of years, as the Fed raised rates 25 basis points at a time over a few-year period, the dollar fell the entire time. It never rose, even though the Fed was hiking rates. And so I think the same thing is going to happen this time, only this time the Fed might not even hike. And so if the Fed doesn't even hike at all, then the dollar's going to fall even faster than it fell when they were hiking by quarter-point increments. But anyway, thank you for the call. Let me give somebody else a chance, and I look forward to running into you on the campaign trail here in Connecticut. Anyway, Zach in Pennsylvania. Go ahead, Zach.
Yeah. Hey, Peter, thanks for having me.
Zach, are you there?
Yeah, I'm here. Can you hear me? Peter.
I hear you loud and clear.
Oh, okay, great. Yeah, thanks for having me. I'd just like to know what drugs they're snorting over at Time Magazine. Maybe David Epstein is their dealer. I don't know.
Anyway.
I
said I just gave the whole monologue
right,
about Ben Bernanke. So if you missed that, just wait till it's over.
And, I
got
it.
Again because I spoke for 20 minutes on that subject.
Oh no, I got it. I was just reiterating.
Do you have another question?
I had two little comments and then one question.
My video blog. I did. Yeah.
First, I agree with you on pretty much absolutely everything except two small areas. The first is from a pure economic standpoint. You are 100% correct in that if China doesn't loan the U.S. money, their citizens will be much richer. However, including a political aspect, I believe their government intends to keep their masses impoverished so the citizens are easier to control. I think the Tiananmen Square mentality is still there. What do you think about that?
I don't think so. I think easier it is for China communists to remain in power if that's their goal. Remember, think about the French Revolution, right? When you have bad conditions and poverty, that's when the masses revolt. If the masses are content because they're getting wealthier and their standard of living is improving, they're less likely to want to change the powers that be. So that doesn't make sense to me. I think that the more the average Chinese prospers, the more he sees his lot in life improving, the less likely he is to want to complain or rebel against the authorities.
Okay. I see your point there. And secondly, unfortunately, I don't think the president and those at the Fed are as dumb as we'd like them to be. Granted, they are absolute failures in our eyes, but I believe they are serving special interests and are doing exactly what they are told to do. I definitely think, as Ron Paul has touched on many times, there's definitely a special interest behind the Fed, and unfortunately, I don't think they're as dumb as we think they are.
Yeah, I think Ron Paul would have been a much better choice for Man of the Year for getting that audit the Fed bill through Congress to find out all the terrible things that Ben Bernanke actually did.
I agree.
He should have been Man of the Year.
Yeah, but and then this is my
because he's taken the issue. Yeah.
Okay, sorry, there's a bit of delay here. But yeah, I agree with you 100% on the Ron Paul being the Man of the Year. Well, he should have been anyway. But lastly, as for my question, what do you think will be the next jolt for the economy besides the inflationary crisis? Are we looking at a round of mortgage resets? I think the next one is the option adjustable rate or something like that, or do you think we'll see the commercial real estate market hit rock bottom because of? Go ahead.
Well, the real estate market is in trouble from commercial to residential. Yeah, these option arms are going to be exploding over the course of the next year. The option arms are some of the biggest ones. This is actually bigger than subprime. And if you don't know what an option arm was, what an option periods, and they started about 5 years ago, and that's why they're just going to start to come into their resets. But what happened with an option arm was that you had the option of making a very small payment that wasn't even nearly enough to make your real mortgage payment. And so let's say you bought a house, and the real mortgage payment, meaning the payment that you would need to be current payments, was $4,000 a month. But for the first 5 years, you had the option of not paying $4,000 a month. You could have paid $3,000 a month. You could have paid $2,000 a month. Maybe you could only pay $1,000 a month, right? You could pick your payment, right? Well, most people picked the lowest payment possible. They picked $1,000 a month. In fact, there were people who bought these option arms where the only payment they could afford was the $1,000 a month. Maybe they only earned $2,000 a month, but they lied about their income to qualify. After all, they knew if they just made the minimum payment for 5 years, their house would double in value over those 5 years. Who would care about the reset? They would refinance. They would sell for a profit. Now, years later, the terms of the mortgage reset. You no longer have the option to make the minimum payment. In fact, now you have to make an even bigger payment because the 5 years where you were paying $1,000 a month instead of $4,000, that extra $3,000 every month is now tacked on to the balance of the loan. So you now actually owe more money than when you first bought the house. And now you got to pay the mortgage payment on a fully amortized basis on the bigger principal. Well, does the bank, does the government have a snowball's chance in hell of getting that money? Absolutely not, because the mortgage has gone up, the house has gone down, everybody's going to default. So, I mean, so this is a nightmare. This is worse than subprime. It's bigger than subprime. They're scared, you know what list of this thing. That's why the government, the Federal Reserve is in there buying up mortgages. That's why they keep interest rates at zero, because they want to make sure that when these mortgages reset, the interest rates are as low as possible. But you know what? It's not going to matter, because no matter how low they are, nobody's going to make these payments. So this is a mess. The commercial market is a mess. These guys, the commercial market got leveraged up on crazy assumptions regarding rising rates, high occupancy, rising rents. None of that panned out. We have rents are falling. A good friend of mine owns a lot of rental real estate. He's telling me none of his tenants are paying rent. Every tenant is coming to him and demanding that you cut their rent or they're not going to pay. So the landlords are in trouble. Meanwhile, the credit is being cut off to commercial real estate. So they're getting crushed every way you can. Is going to tumble, and the Fed thinks the only prayer they have is to keep the spigots opening, keep buying everything that they can to try to keep this phony house of cards up in the air. But the more they do that, the more they interfere, the more stimulus they shoot into the economy, the worse they make it, the bigger the problem is, the more out of whack and out of balance the economy gets, the worse the fundamentals become. And, yeah, it's all going to boil down to a collapse, a runaway inflation, maybe hyperinflation, a massive unemployment on a scale, worse than today. And, even in that Time magazine article, they actually had a gall to point out. They said, hey, unemployment's only 10%. It's not it's nowhere near the 25% it was during the Great Depression, as if this is crediting Ben Bernanke.
Oh, they're
lying.
What
they fail to tell you is that if we kept track of unemployment, let me finish my point. If we kept track of unemployment the way we did in the Great Depression, it's not 10%, it's 17%, which is a lot closer to 25% than 10. But they don't want to show Ben Bernanke in that kind of light. And when we get this inflationary depression that's coming and runaway inflation, I bet that unemployment calculated the old-fashioned way will exceed 25%. Thank you, Ben Bernanke.
I agree.
Anyway, all right. Well, anyway, thanks for the call, Zach. Next up is Tom in New York. Go ahead, Tom.
Hey, Pete. Actually, I'm from New Jersey.
Hey, Tom.
Anyway, I'm not calling to talk about Ben.
What exit?
What exit? Very good. Actually, I'm in North Jersey. I border New York State. I'm not even close to the Parkway or Turnpike. So I'm not calling to talk to you about Ben Bernanke because I just heard the past half hour of your show. But in any case, I wanted to just ask you about peak oil. What is your opinion of it?
Well, look, I think that oil prices are rising, number one, as a function of the diminished value of currencies around the world, particularly U.S. dollar. But I also do believe that over the years, the world has underinvested in exploration, and I just don't think we've done the exploration and development and put the money into it. Part of that is because of fears that OPEC would always keep prices low, and that probably worked to OPEC's benefit by constantly threatening to lower oil prices every time, and to keep them down. It discouraged a lot of long-term investment, and that worked against us. Every time presidents of the United States are trying to get OPEC lower prices, increase output, that's helping to create the oil shortage, because it's throwing a cold blanket on our own exploration industry and other nations. And of course, we're taxing these companies. There's a lot of costs involved in oil exploration and development. There's a lot of risk there, and of course, the government adds to that with a tax code and other things like that. But I don't know whether or not I attribute it all to any kind of, formula that determined, when we would peak out on our ability to supply oil. I think there still is a lot of oil, beneath the Earth's surface, and if we get it out. And I know that technology is growing rapidly. I'm involved myself in an oil wells in North Dakota. And I'm doing that, personally with, in a private partnership. And, I don't know if people know about the Bakken formation in North Dakota, but it's huge. It's the biggest find in the lower 48 states in history. North Dakota is now the fourth biggest oil-producing state in the union, behind Alaska, Texas, and California. And so there's a huge industry growing in there. And the technology is increasing so rapidly that are being drilled down there, the amount of oil that we're able to extract from these wells, it's enormous relative to what was able to be extracted just a few years ago. So the technology is there. The oil is there, but, we need to find it and explore it. But, I know one thing, that we're going to print money a lot faster than we drill for oil. So in terms of dollars, oil prices are going a lot higher, which is one of the reasons that I want to be in the oil business. Because I think there's going to be a lot of money, a lot of profits flowing out of the oil business.
Well, so speaking of profits, how would a small investor like myself best try and take advantage of that? I mean, would you buy, like, a big company like ExxonMobil or buy an ETF or something like that?
Well, I don't know if ExxonMobil – I mean, look, I own ExxonMobil personally, and I own, some of the U.S. oil stocks. I have more of my own money in international oil stocks. I think the valuations are better, and I have a lot of Canadian, in my newsletter that just came out the other day, I recommended one of the Canadian natural gas plays, also one in Australia. But, yeah, there are a lot of ways globally to play that theme, and I would encourage you – do you have an account at Euro Pacific Capital?
No, I don't.
Why not? So you need to give us a call. Call up. I mean, we have a lot of stocks that we recommend in that space. Talk to a broker at Euro Pacific Capital at 800-727-7922. Learn about the stocks that I like in oil and gas around the world, and get a good understanding of the risks as well as the rewards. Determine whether or not these are the types of stocks that you want to own, if they're suitable for your situation, and then open up an account. Buy them through us, or buy them someplace else, whatever you want to do. But we got a lot of information that we can give you. We can certainly lead you in the right direction if you want to explore, this type of investment. And I think it's, I'm doing a lot of it myself. Most of my clients I've got a lot of my clients in energy type investments. I've been investing in the energy sector for over a decade. And, other than, maybe 2008, and it's been pretty good, Or 2008.
Yeah. Okay. One other question.
All right. Well, yeah.
Mark-to-market accounting. What's your opinion on that? Do you think they should put that back?
I like mark-to-market accounting. I don't like the mark-to-myth accounting that we have now. I mean, one of the reasons that the banks are able to repay their TARP money is because they're lying about their assets, because they're no longer marking them to market. And one of the reasons they're able to get away with a lot of these phony assumptions is because the Federal Reserve has been buying up the assets. It's buying everything under the sun to maintain phony valuations on these assets anyway. And, of course, they're able to earn a lot of money in a world of 0% interest rates. Yeah, it's easy for banks to make money when the cost of money is zero. Anybody can make money in that environment. All they got to do is borrow from the Federal Reserve at practically zero and loan it back to the Treasury at 4.5%. And anybody, my 7-year-old can make money doing that. And they're making a ton of money. And, they're paying back some of the government TARP money. But, of course, they're also lavishing huge bonuses on themselves. For 3 companies on Wall Street, 2009 is a record year. People that work for Goldman Sachs, J.P. Morgan, and Morgan Stanley will earn more money in 2009 than in any year in history. Now, how can that be? The country is hurting. We're in the worst recession since the Great Depression, yet these guys are making more money than ever before? It's crazy. These firms should have gone under. These guys should have pink slips in their stockings, not bonus checks. But, We got all this backwards. And, of course, all the losses that used to be on the books of the banks are now on the books of the Fed. Yeah, Merry Christmas for the rest of us.
Gotcha. Kind of what I thought, too.
All right, well, thanks a lot, Tony.
Thank you.
All right, thanks, Tony. Next up is JR in Texas. This isn't the JR, is it? I thought, didn't somebody shoot you?
No, it's not.
Anyway, go ahead. Good.
Quick question. Why would you prefer bullion gold over the ETF GLD?
Well, the only risk, the risk of the GLD is that, the gold's not actually there. I don't know, how large or small that risk is, but, you're taking it on faith. I'm not really sure who's auditing the companies. I know they have some auditors there, but, Enron had auditors, so there's a chance that they don't have all the gold that they claim to have. Beyond that, assuming that it's completely on the up and up and they got all that gold there, then, there's no reason not to own it through the GLD, other than the fact that it's certainly less of a less private way to own gold. It's in your brokerage account. Everybody knows about it. If the U.S. government decides to seize gold, you ain't going to see any of that gold. They're going to seize that ETF gold, lickety split. Whereas, if you have the gold in your possession, if you have it, stored someplace out of the country, it's going to be a lot more difficult for the government to get that gold from you. That's all.
Okay. Second question is, you recommend buying, international stock, from companies abroad. What is the difference between, doing that and getting an international U.S.-based company, say like, Cisco or one of the other international companies that do business overseas, in those economies as well?
Yeah, look, I've asked this question a lot on television. I get asked that, why not buy U.S. stocks that benefit from global growth? And I say, look, if you're going to limit your investment universe to American companies, then, yeah, you got to buy the companies that are exporting, that are benefiting from foreign markets. But if you have a wider universe, if you're looking around the world, there are no U.S. companies that I know of that generate all their earnings offshore. But there are plenty foreign companies I know about that generate all their earnings offshore. So I want to get, unfortunately, as far away from the U.S. economy as I can at this point. And so if I think the growth is happening overseas, why not be involved in overseas companies where all the earnings come from the overseas markets, as opposed to a U.S. company where it's only a portion? In addition, just as an investor, I find that most foreign companies trade for valuations that are lower. You can buy more earnings and buy more dividends if you're investing abroad than you're investing in the United States. So from a bargain perspective, there are better values there. And so that's where I want to buy. But also, one of the other real problems I have is the hostility that I see in this country towards businesses and towards profits, and the tendency of American politicians to vilify and punish companies that do well. And since I think the economy is going to be getting a lot worse, the budget deficit is going to be getting a lot worse, I think Washington is going to be looking for scapegoats. They have a tendency to come out with these windfalls profit taxes. Anybody who's making a profit, why don't they have a windfalls profit tax on these Wall Street firms? That's where they should have them. But they might have them on oil companies. I don't hear anybody say, what about a windfalls profit tax for Goldman Sachs? But an oil company starts to make a buck and they demagogue it immediately. So I don't want to own a company where the government's going to steal all my profits with some kind of windfall profit tax. So unfortunately, capital is treated better in other countries. So that's where I'm sending my capital. Capital goes where it's treated best. I can get a better return abroad. I can get better valuations, better dividends, and I'm not as afraid of those governments undermining the profitability of my companies by regulations and taxes that are going to be detrimental to the companies and therefore my interests. And I don't want to invest in a country where the government is deliberately undermining the value of the money. So I need to seek shelter. And I'm asking reasons that I want to go to the United States Senate. One of the reasons I'm a candidate for the United States Senate is rather than trying to figure out how to protect myself, against all the stupid things that are being done in Washington, maybe I should go to Washington and stop them from doing all those stupid things in the first place. Because we can reform the government and Federal Reserve so that this country is friendly to business and friendly to capital, if we can encourage and reward savings and entrepreneurship with sound money and lower regulation and lower taxes, then I would be buying American companies. And nothing would give me greater pleasure than to be able to buy more American companies as an American. But, as an investor, I can't do it.
Understood. Well, how about things like Brazil, like what they did recently for foreign investors?
The taxes, the higher transaction tax? Yeah, look,
Correct.
there are all these countries are trying to put the brakes on the hot money that's leaving the United States and chasing down there. Meanwhile, if you bought that dip, the Brazilian market rallied. I own a couple of Brazilian stocks. I don't have a lot of them. But I think these BRIC countries, which is Brazil is the B in BRIC, Brazil, Russia, India, China, I think there is a lot of potential there. The governments are trying to act foolishly, in my opinion, to try to slow down the rate of appreciation of their currencies, but they need to just take their foot off the brakes and let these currencies go. But they're not doing it. Anyway, let me hop. I know we're starting to run out of time. Let me try to take these last two callers, and that will be it. And they're both Canadians. So first up is going to be Scott in Toronto. Go ahead, Scott.
Hey, Peter. My question is, Ben Bernanke, he's paying interest on the reserves that the banks hold at the Fed. And isn't that like bribing the banks not to make loans?
Basically.
So
and then in addition to that, the banks are taking the money they're getting from the Fed and they're loaning it back to the U.S. government by buying treasuries, which means they don't have the money available to make business loans.
Okay, so if rates raise, say Bernanke raises rates, wouldn't banks find it more profitable to make loans to consumers or to people in the U.S. economy instead of back to the government? And wouldn't that create a lot of inflation?
Well, making loans to consumers, yes. If we just create money and then banks loan it to consumers to go out and spend it, yeah, that's pure inflation.
Mm-hmm.
We want banks lending money to producers to make stuff, not to consumers to buy stuff.
Okay. Another thing is the PPI. Why did that go up so much all of a sudden?
Well, prices had come down, for a lot of these raw materials, and you were starting to move back up off of a low base. But ultimately, prices are going to keep on rising. The CPI came out today; it was up too. It wasn't up as much as the PPI, but ultimately it will be. I mean, but everybody is downplaying it. I mean, they're saying, "Oh, there's no worry about inflation. We don't have to worry as long as the economy is weak, as long as people are unemployed. We don't have to worry about inflation." That's nonsense. Throughout history, the worst inflations come at times of high unemployment. They come at times when the economy is weak. It's very rare that it's a strong economy, a vibrant economy that has an inflation problem. It's the opposite. It's a weak economy that has an inflation problem, and that's what we're going to get because it's in a weak economy where the governments are creating more inflation. They're printing more money. And in a strong economy, even if the government is creating inflation, it's hard to see it because productivity is rising, goods are being produced, and that's preventing prices from rising despite the fact that governments are inflating. But in a weak economy where we're shutting down factories and producing less stuff, the impact of the inflation on prices is much more obvious and noticeable.
So why didn't the media jump all over that? Because if you look at that like over the year, I mean that's like 12% a year.
Because the media doesn't care. The media is told that it doesn't matter. Businesses aren't going to pass it on. It's temporary. They just justify it because Ben Bernanke, Man of the Year, doesn't care about it. So why should they?
Right.
Anyway, let me go. Let me let you go so I can get your fellow countryman in on the last call, which is going to be Bryce in Montreal.
Yes. Hello, Mr. Schiff. It's a pleasure.
Hey, Bryce. How are you?
I'm doing well, thank you. I'll start off by telling you, first of all, that my wife is a big fan of yours, and she's not the type to be a fan of anyone. You share a birthday with her, so she assumes that means you must be smarter than most.
Are you a fan too, or is it just your wife?
Oh no, I'm a fan. I'm the one who actually introduced her to you with your commentary on MSNBC and Fox. Anyway,
Okay.
the reason I'm calling, I'll ask my question and then I'll get off.
You guys know we're opening up Europe, Pacific, Canada sometime, hopefully by mid 2010. So you guys will have the opportunity to become clients as well as fans.
If as long as there's an announcement on the website, I'm sure I'll catch it.
You'll get an email, I'm sure. Mm-hmm.
Okay. The question I have, I'll ask it and then I'll get off so that you can answer. Is about currency valuations outside of the U.S. Canada, of course, is like a tenth the size of the United States, and historically, with the exception of a couple blips, we've always traded with our dollar less than that of the U.S., and that's been great because, of course, we're a net exporter. And in 2007, we went up to, I think it was $1.10 U.S. to the Canadian dollar, which was just incredible, and scared a lot of the companies that rely on that export market. So my question to you is, do you think it is likely that should the U.S. dollar continue to fall precipitously, as you have pointed out, if things continue the way they have, the U.S. dollar is likely to drop, that countries like Canada that rely on that export market will deliberately try to sabotage their own currency just to keep it low and to keep the export market afloat?
Well, I mean, it's certainly possible that Canadian politicians will make the same mistakes that politicians in other countries are making. But if they act, correctly, they will not worry about a strengthening Canadian dollar. They will enjoy a strengthening Canadian dollar. It's possible and likely that with a collapsing U.S. dollar, Canadians will export less to the United States, but they will import more from the United States at cheaper prices, and that will benefit Canadian consumers. In the meantime, a lot of Canadian exporters will end up selling more products to Canadian citizens who are wealthier as a result of a increased purchasing power, and so they won't need to export as much when they have wealthier consumers in their own country. But also, a lot of the exports that used to go south to the United States will end up going east to countries like China. Because as the U.S. dollar is dropping, it's going to drop, I think, precipitously against a lot of other currencies in the world, particularly in China. And all of a sudden, you're going to have a Chinese middle class that's going to be even bigger than the U.S. middle class. And that's a lot of consumers for Chinese manufacturers to export to. So, we don't exist in a vacuum here. There are plenty of other people that can fill the void of the American consumer. Anyway, I guess he's off the air. We just got a couple of minutes left. Anyway, that's it for today's show, everybody. I did a video blog. I've been trying to put it up for hours and hours. I was on Ben Bernanke, and YouTube isn't taking it. I've been trying to know. There must be some kind of problem on YouTube where no matter how many times I try, I can't upload this video. But I'll probably try to get it up later today or maybe tomorrow. But it's pretty much, just the same as the first 20 minutes on Ben Bernanke. Man of the Year. But again, anyway, remember, if you have any questions about investments, if you want to talk about investments, if you want to open up an account here, which I would encourage you to do, call the brokers. Call up 800-727-7922. Talk about, the accounts that we can open. Don't forget to ask about the new managed accounts. We offer managed accounts now, not just traditional brokerage accounts. I also got a mutual fund now that's doing really well. The Europe Pacific Capital Halter China Fund, up better than 20% since inception 4 months ago. Get a prospectus on that, learn about the risks investing there. Call about gold and silver, the precious metals. We are now starting Europe Pacific Precious Metals. Hopefully, I've got the first hire in the office. It should be any day now. I hope we'll start selling physical gold and silver coins minted in the Perth Mint for delivery right to your front door. In addition to just storing the metals at Perth, he'll be able to have them delivered to you and keep them in your possession. If you're interested in that, call up, the 800 number, 800-727-7922, or try to leave a message for Tony Bivlacqua. He's the first guy working at Euro Pacific Precious Metals. Anyway, that's it, everybody. Don't forget Crash Proof 2.0. Buy that book if you don't have it. We got to get more copies out there. I got another book coming out in April on how an economy grows and why it crashes. It's going to be great. I can't wait for that book to come out. Anyway, that's it, everybody. I see they're counting me down. I hear the music. Anyway, take care. This has been Peter Schiff, President of Euro-Pacific Capital, candidate for the United States Senate in the great state of Connecticut. Take care, everybody. Back again next week for another episode of Wall Street Unspun, midweek market update. Take care, everyone.